Stocks down big for the day on Friday. Bonds up, gold down. It's always nice to be able to say, I told you to watch for this. We'll get to that in just a minute. Hey, you want to help us out? Buy our book, or even better, follow the links in the show notes to our Patreon page and become a sponsor of the show. And of course, even the lowest level gives you the ability to participate once a month in a session. We'll be doing Q&A, charting stocks you're interested in, making comments, all sorts of things. So again, want to help us out? Buy the book, go to the Patreon page, and if you go to the middle level of support, you'll actually end up getting a free book. Anyway, let's jump into these charts. This is the comprehensive review and forecast for the week beginning Monday, the 12th of November. What do we see going on? Well, as we jump into these charts, we see the week ended with a small green up candle on the weekly chart, actually on the S&P 500, not even getting as high as where that week started down on the Heikin Ashi candlesticks, a long wick on top. Remember, these Heikin Ashi candlesticks are measured completely differently than your typical candlestick open, high, low, close. That's the reason we love them, because they seem to work so well in helping us follow average pace. That's what Heikin Ashi apparently means in Japanese. We see the derivative oscillator lost some downward momentum. Price percent oscillator is pretty much heading sideways, but down a little bit. We did have a pretty dramatic pullback in the markets from the strong down moves. However, even that pullback suffered a lot toward the end of the week, well, right on Friday. So it is interesting. Like we said, all things being equal, the market tends to move in the direction of your largest chart, which is the weekly, and the weekly is still down, not really close to a crossover, going up. The market seems to have digested the results of the elections and is still in a downward focused move. We go to the 2-day chart. What do we see? Nonetheless, even with that down move, the latest 2-day chart, at least the first day of the latest 2-day candle, it's not confirmed yet, won't be confirmed until the candle closes, is crossing over, going up, which of course, once that's confirmed, will pull us out of the possibility of jumping into a down move if that 2-day chart rotates over, going up. It's a red open box candle. It isn't over until the fat lady sings, as the saying goes, and that isn't over until the close of the market on Monday. This is a 2-day candle, just the first day of the latest. It is a red open box, not a strong red down candle, solid. It just shows some pullback in the up movement, so we'll continue to keep our eye on things and see if we have that crossing over, going up. What do we see on the 4-hour chart? It hasn't crossed over going down. It was down in the morning and the afternoon. Again, down 0.98%, almost 1% for the day. Derivative oscillator losing energy, price percent oscillator heading down. Let's just wait and see what we see when it comes to Monday. So we will be watching to see if we have a potential for a down move, with the concern that that 2-day chart may close crossing over. If it does, now, yeah, here's a great lesson, okay? Great lesson. If it does cross over going up and then immediately crosses back over going down, remember the lessons from that? Typically means that if it crosses over and then recrosses back over going down, means that that attempt at an up move miserably failed. That's what we typically see, and we may see it, and I remember it happening here lately. We'll see it in one of the charts as we go along. But always pay attention to that. When different breakouts fail, typically the movement in the opposite direction is going to be really strong and much longer lasting. We'll try to find that where it recently happened in the charts. Mark that down in your weekly market worksheet as a lesson to watch for and learn. Okay, we go now to the Qs, the NASDAQ 100. Now, it was down big time, 1.69% for the day. That, of course, took that green candle down to nothing but a green spinning top, almost a doji, means lots and lots of indecision, tending up. But again, derivative oscillators lost a little bit of downward momentum, still strongly down. Price percent oscillator heading down. And again, just barely pushing through that weekly trend line. We go from the weekly chart to the 2-day. And again, the 2 days heading up isn't crossing over at this time. It's a red spinning top, means indecision, tending down. Remember, a doji means critical indecision. tending down, or tending in whatever color it is. So we go from the 2-day to the 4-hour. What do we see here? Strong down movement in the morning and the afternoon. If we, again, watch for the beginning of the week with a crossover going down on the Qs, if indeed that plays out, that is your jumping in point after this long pullback. So be prepared to jump into a practice trade such as PSQ. What is that? That's the ProShares short chart. It moves in the opposite direction of the Qs. It's a short of the NASDAQ 100. This is what we get a little bit more sophisticated, not super complicated. We're not talking about you going buying puts and that kind of stuff, doing naked shorts or something. No, nothing like that. We're just talking about a fund that moves in opposition to the Qs. That's something for you to practice on, okay? Do that if that move does present itself to us. And don't forget, we've got a great training on inverse ETFs, how to make money when markets crash. And my friends, this is key. Practice this kind of stuff because the markets are going to crash. Are they crashing now? I can't tell you that. But when you have sustained, strong down moves, you want to be able to play those in the inverse and make money when everybody else is out of the market. Well, again, practice money. We are not a stock calling service. We're an education firm. But we want you to practice with us and learn that. Okay, what's going on when we get to the weekly chart on 20-year bonds? We see that bonds have been going down, 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 tried to go sideways and capture a little up movement and then crossed back over, moved back over going down. Second week of strong down movement after a sideways slide. However, the derivative oscillator is losing momentum. Price percent oscillator's heading down, but almost flat. But again, we still call that down. So we've got a down call on the weekly. The 2-day, how did it end the week? Well, it's a little strange here. As we said, when things fail and cross over, they tend to go down. Well, it did. It went down 3 candles and then sideways again and starting to go up. That means a very, very unsettled market, trying to look back in time and see when in bonds we've even reached that level. It has been well over a year, if not many times longer, but bonds now have attempted to move up, moved down, now moved up again. That's showing you a really squirrely market on that 2-hour chart. Again, we'll keep our eye on things. We do not have, and again, we may see, as you watch this, mark this in your trader's journal to really pay attention to if this up move on the 2-day chart fails on Monday. If it does fail on Monday, I'll go back to that adage that bonds are probably going to keep moving down. So again, really, really strange. We can't call the 2-day chart yet. Why? Because, of course, it hasn't finished forming the candle. It will finish on Monday. So watch bonds on Monday to see if they sustain an up movement or if it pulls the blue price percent oscillator back through the red signal line and heads down further. We'll watch. What do we see going on the 4-hour chart? 4-hour chart is crossed over heading up and heading up quite strongly. Again, up for the day, 0.75%. Derivative oscillator continuing to gain upward momentum. And again, we may see this 2-day chart on Monday crossing over going up. Still confirmed down at this point. Okay, that's where we are on bonds. Lastly, we will go to gold. What is gold trying to do? Well, we had hoped it bottomed out and was going to just rocket upward. But as we look at that weekly chart, remember how gold just bottomed out for weeks and then took off up 3 weeks and sideways and down a little bit for this past week. We have a red spinning top, means indecision, tending down. Derivative oscillator still quite strong up. Price percent oscillator's pretty much gone flat on us. We look at that 2-day chart. What do we see? Trying to cross over going down. Just the first day of the latest one. Keep your eye on it. Derivative oscillator's been losing energy since it peaked back on the 2-day candle ending Tuesday the 23rd of October. So again, gold is trying its best this first day of the latest 2-day candle. Strong down. We'll see if it crosses over going down on Monday. If it does, of course, we will be primed to continue following that, seeing as how gold has crossed over going down on the weekly chart. And we go to, it's going up on the weekly chart. We'll continue to watch that and see if that pulls that potential up play away from us. And then what do we see on the 4-hour chart? Strong movement down in the morning and in the afternoon. We'll continue to keep our eye on things there, see how that plays out. Maybe gold is just going to rocket back down again, maybe hit that bottom level and hang out and see what's going to shake out in the stock market. That's where we are, folks, as we end the week. Prime things to be paying attention to is primarily the cues for a potential down move if it shapes up. Also potentially the S&P 500, not as much as the cues for a down move. And of course, watch bonds, see if that crossover on the 2-day chart evaporates. That is a crossover going up and it starts heading down again and opens up some opportunities. And let's just see where the hell gold settles out. So we got some great trainings for you. Please pay attention to those at the end of the video. They will pop up. And for those of you listening by audio, we appreciate our podcast audience. You can find all the great trainings at chartingwealth.com. And again, if you're an email subscriber, please check your email boxes. I get messages every now and then that folks aren't receiving their emails. They are going out every day. It may be in your spam box. And if you're not receiving it, don't hesitate to go and sign up at the website. And you will get them every single day that we put these out, plus all the special trainings and all the updates. So that's where we are, folks, as we end the day. You want to sponsor us and help us on Patreon. We would so appreciate that. Follow the links in the show notes. And again, buy the book if you want to know the down low on what we do. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.